Hello friends, welcome. So in the previous session I discussed about the banking sector, and in the banking sector we discussed the meaning of bank, what is the need of the bank, historical evolution of the bank. अब इस सेशन के अंदर हम लोग डिस्कस करने वाले हैं what are the different types of bank, right? So we are basically going to discuss the classification of the banking sector in India. So we have already discussed meaning and the historical evolution. In this session we will be discussing the classification, and in the subsequent session we will be discussing the banking schemes, other important banks and the financial institutions and latest developments. Classification of the banking sector. So overall the banking sector can be classified into three major categories. One set of bank is commercial banks, right? So what is the meaning of commercial bank? Commercial, the word commercial is basically doing some activity for profit making, right? So commercial banks are working for accepting the deposit and giving the loan and ultimately making the profit. The second category of bank is regional rural banks. Regional rural banks, the name itself indicates that they are focused on the rural areas. Then we have cooperative banks. The cooperative banks, they are actually working for their own members. The members or the number of people, they are coming together. They are establishing a bank. They themselves are operating the bank. They are the borrowers also. They are the depositors also. So it is the democratically controlled bank, right? We will discuss about each one of them in detail. So let us see over here the complete structure of the banking sector. So take 15 seconds and just read it out, and then I will discuss. So basically, the overall categorization of the banks, it is in the form of scheduled and non-scheduled banks, right? What is the meaning of schedule? Scheduled banks are those banks whose name is mentioned in the second schedule of RBI, right? Non-scheduled banks are those who are not mentioned in the second schedule. Now these scheduled banks, they are having some obligations, at the same time they have some advantages. Non-scheduled banks, they don't have such obligation and they don't enjoy the advantages. What are the obligations, what are the advantages? We will see in the subsequent slide. Now just focus upon the different categories of the scheduled banks. So scheduled बैंक के अंदर हमारी different categories हैं, जिसमें first category is the commercial banks, the second category is the cooperative banks, right? अब commercial के अंदर क्या क्या आता है? Commercial के अंदर we have the public sector banks, we have the private sector banks, we have the foreign banks, and we have the regional rural banks, right? Now in the public sector again there are two categories: A, nationalized bank, and B, the SBI and its associates. So SBI is also a nationalized bank, but this is having a separate grouping. The private sector banks, they are classified into old private sector banks, that means the banks which were established before 1990 reforms, and new private sector banks are those which have been established after 1990 reforms. Then we have foreign sector banks. Foreign banks are also part of the private sector only. Then we have regional rural banks. Regional rural banks are working for the rural areas. So these all are the scheduled banks. Now coming to the non-scheduled banks. In the non-scheduled banks, first category is local area bank. Then we have non-scheduled urban cooperative banks. Right. In the scheduled bank itself, in the cooperatives, we have scheduled state cooperative bank and scheduled urban cooperative bank. So one is for the rural area and this one is for the urban area. So this is the overall structure of the banking sector, and in the recent years there are couple of more categories of the banks which include payment bank, small finance bank, right? So those banks are also there, and we will discuss about those banks also. And in this overall category of bank, these payment bank and this small finance banks, they form a separate category. Now, what is the meaning of scheduled banks? So scheduled bank, as I told you, they are first of all mentioned in the second schedule. Then there are some conditions which they have to meet. So these conditions include, first they have to have a minimum reserve and the paid up capital of 5 lakh rupees. Then they should be registered as a company, right? So they should be registered as a company and they should be working in the interest of depositors, right? So this is very, very important that they are working in the interest of depositors. Now, what is the benefit or what is the advantage of any bank having the scheduled bank? So the benefit of being a scheduled bank is that they are the member of the clearing house. What is the meaning of clearing house? Clearing house is a place where all the checks, drafts, online transfers, they are possible across the bank. So if you are a customer of the Punjab National Bank, I am the customer of State Bank of India, and you want to give a check to me for the fees, you give the check to me, I will deposit that check in my State Bank of India. My State Bank of India will go to the clearing house and show to the clearing house that this is the check given by Punjab National Bank, which is a member of your clearing house only, like this clearing house only. And based upon that check, the clearing house will give money to the SBI and take money from the PNB. So this is the facility of the clearing house. So the person becomes the member of the clearing house, and apart from that, the RBI also provides, or central bank actually provides some borrowings at concessional rate. So they provide the borrowings at the concessional rate, and this borrowing at the concessional rate is not available to the non-scheduled bank, right? Then there are some obligations on the part of scheduled bank. For example, these scheduled banks, they have to give regular reports to the RBI. Then another obligation is that they have to maintain the reserves, for example, the CRR with the RBI. So in case of non-scheduled bank, this CRR is maintained by the bank itself, but in case of scheduled bank, this CRR is maintained with the RBI, right? So this is about the scheduled bank. So here we can see scheduled bank is one which has been included in the second schedule of the Reserve Bank of India Act 1934, right? So second schedule of what? Second schedule of Reserve Bank of India Act 1934. It must be financially and economically sound, right? And it should satisfy three conditions. So what are the conditions? It must have a paid up capital and reserves, right? What is the meaning of paid up capital and reserve? So paid up capital and reserve means, this capital means the amount which has been contributed by the shareholders, and reserves means the amount of profit which the bank has made in the earlier years and kept it as the reserve for future usage, right? So capital is the contribution by the owners, and reserve is basically the past profits which have been earned by the bank, and these past profits have been kept as the reserve for future purposes. So it must have a paid up capital and reserve of an aggregate value of not less than 5 lakh rupees. This figure is very reasonable. 5 lakh rupees is a very nominal amount these days. So it should work in the interest of its depositors. This is very crucial. So now how to identify whether the bank is working in the interest of depositors or not? That thing is actually judged by the RBI through various internal parameters. It must be a joint stock company and not a sole trader or proprietorship partnership firm. So this has to be company, and this company has to be registered in the Indian Companies Act 2013. So there is a Companies Act 2013, and before that there was a Companies Act 1956. So this bank should be registered in either of the Companies Act. So the people like you and me, we cannot open the bank in our name, in either in proprietorship or in partnership, right? We have to form a company. What is the logic? Why we need to form a company? So the company is having some legal identity of its own, and there is a lot of transparency available in the company, right? So because of the transparency and because of the ability of the person to make a deal with the legal person, these are the two aspects because of which the company is preferred, so that in the future, if the person who started the company, even if that person is no longer existing, still the company can fulfill all its obligations. It has to maintain cash reserve ratio with the RBI and submit periodical returns to the latter under the Banking Regulation Act 1949, right? So these are the obligations. These are the obligations. So regularly they have to maintain the cash reserves. They have to maintain the cash reserves with the RBI, right? And they have to submit the periodical returns to the RBI under the Banking Regulation Act of 1949, right? So this is all about the scheduled bank. Now, scheduled bank enjoys certain rights. So we have indicated that there are many obligations, certain conditions have to be fulfilled, but why at all any bank would like to fulfill those conditions? What is the advantage? So first of all, they have right to receive the refinance facility from the Apex Bank. Apex Bank basically means the central bank or the RBI, right? Refinance facility. Refinance facility means, for example, if the Oriental Bank of Commerce is a scheduled bank, right? This Oriental Bank of Commerce has given some loan to its customer, right? Now OBC is short of funds and it requires some money, so it will go to the RBI and RBI will give loan to the OBC. So OBC financed its customer and RBI refinanced the OBC for the finance it has given to its customer. So this is called refinancing facility. So in the refinancing facility, the RBI is giving the loan to any scheduled bank to make up for the loan that which have been given by the scheduled bank to its own customer. Entitled to currency chest facility, right? So this is also there, currency chest facility, right? So the bank will have the currency chest, so there will be sufficient amount of cash available with the bank. Right to become a member of the clearing house. I already told you, clearing house basically gives the facility of money transfer across the bank. So these are the facilities available to the scheduled bank. Non-scheduled bank, it is that which has not been included in the second schedule. Simple. So all those banks which are not part of the second schedule, they are non-scheduled bank, and it is subjected to statutory reserve requirement which it is required to keep with itself and not with the RBI. So for example, CRR, cash reserve ratio, it has to keep with itself, it has not to keep with the RBI. It is not entitled to concessional and borrowing facilities from the RBI. It is not part of the clearing house also, right? So there is no condition, there is no obligation, and there is no entitlement or right. So all these, they are called non-scheduled bank. Now, scheduled bank and non-scheduled bank, you can see the comparison. So meaning of scheduled bank, they are the banks who are having a minimum paid up capital and the reserves of 5 lakh rupees, and they do not harm the interest of the depositors, and they are basically corporation or a company. So they are a corporation or a company. Non-scheduled banks are the banks which do not comply with the rules specified by the RBI, or say the banks which do not come under the category of scheduled banks, right? So they do not comply with the rules specified by the RBI, or say the banks which do not come under the category of scheduled bank. Second schedule, it is listed in the second schedule. It is not listed in the second schedule. Cash reserve ratio, it is maintained with the RBI and it is maintained with the itself. Borrowing, they are allowed, and in this case they are not allowed. Return, they have to be submitted periodically, and here there is no such provision. Member of clearing house, it can become a member of clearing house, and here it cannot become a member of the clearing house. All these points we have already discussed in detail. So here again we see the overall category of scheduled bank and the non-scheduled bank. In the scheduled bank we have commercial, cooperative and cooperative bank. In the commercial bank we have public sector bank, private sector bank, foreign bank and regional rural bank. So coming to the commercial banks, right? So the commercial banks, what they are doing, they are accepting the deposits and they are giving the loans, and in this process they make the profits. Right? So in this process they make the profit. Now this commercial bank, they are classified into primarily the public sector banks or PSBs and private sector banks. Right? What is the meaning of public sector bank? Public sector bank means any bank in which the government is having the ownership of 51% or more than 51%. So if the government is having the ownership in the bank to the extent of more than 50%, rather we should say more than 50%. More than 50%, so this is called a public sector bank. And in case of private bank, if the ownership of the government is less than 50%, then this is a private sector bank. So here we can see a commercial bank is a financial institution which performs the function of accepting the deposit from the general public and giving loans for the investment with the aim of earning the profit. So this is very, very crucial. So they are commercial bank, that means they are in the business, they are in the commerce, their purpose is to make the profit. These are registered under the Indian Companies Act 1956, and also governed by the Indian Companies Regulation Act, Indian Banking Regulation Act 1949. So they are registered as a company. They are registered as a company in the Indian Companies Act, and their governance is done by Indian Banking Regulation Act, right? So they are under strict transparency, disclosures norms, and in the Indian Banking Regulation Act they are under strict vigil of the RBI as far as the banking business is concerned, right? So as an organization they are under the Indian Companies Act, and as a business in the banking sector they are under the governance of the RBI. So for the banking sector, RBI is having the vigil, and for the establishment, for the governance, for the efficiency of operations, transparency, everything, the Indian Companies Act is regulating the banks. Now commercial banks refer to both scheduled and non-scheduled. So it can be any, right? It can be any, and they must be regulated by the Banking Regulation Act 1949. They are further classified into public sector banks and the private sector banks. So now there are some functions which are performed. So they are called agency functions. They are called agency functions. What is the meaning of agency function? So agency function means the commercial bank, they perform as agent of its customers, right? So they are basically working as the agent of their own customers. That is why this is called the agency function. First function is transfer of funds. So bank provide cheap and easy remittance of funds from one place to another through demand draft, mail transfer, telegraphic transfer, and these days we can see there are lot many new way of transfer. For example, NEFT, we have UPI, IMPS, RTGS, right? So all these facilities are provided by the bank. Then facility of collection of the funds. So if we deposit our check in the bank, they collect the check, demand draft, bills, bond, etc. on behalf of the customer. They also perform the function of buying and selling of the securities on behalf of the customer. So banks also purchase and sell shares and securities on behalf of their customers. So these facilities are available only upon the request of the customer. It is not that bank will do it on its own. Bank will take the instructions from the customer and then only this function will be done. Then collection of dividend and interest. So if the customer has made some investment into the shares or into the bonds, then there is a regular income coming from the shares and bonds in the form of dividend or interest. So this collection is done on behalf of the customer by the bank. Payment of bills. So banks can also make payment of various bills like telephone, electricity. So nowadays we can see we can make almost every payment from the bank. So all those facilities are available from the side of bank. This is very crucial. So acting as executor or trustee. So banks can also act as the executors and trustee of wills of their customer, right? So if the customer makes some will, so that will is also executed by the bank on behalf of the customer. Payment of tax and consultancy. So this is also done. All type of taxes can be paid from the bank's website nowadays. Acts as the correspondent agent and representative. So bank also act as the correspondent agent or representative of customer and help in securing the documentation for the air and sea passage, right? So when any businessman has to send the goods from India to outside India, or maybe the person has to import the goods from outside India to India, in that case the bank acts on behalf of the customer and it manages the documentation part. Now you can see the previous year question, 2010 question. The functions of commercial banks in India include statement 1, purchase and sale of shares and securities on behalf of the customers. Number 2, acting as executors and trustees of wills on behalf of the customer. Which of the statements given above is or are correct? So we can see both 1 and 2, sale and purchase of shares and acting as the executor and trustee of will. Both the functions are performed by the banks. Now, public sector banks. So public sector banks, public here means basically the government ownership, right? So government ownership means anything more than 50%. If the shareholding of the bank to the extent of 50% or more is lying with the government, then this is called public sector bank. So these banks are in which majority of the ownership or shareholding lies with the government, that is more than 51%. Rather, we should say more than 50%, because once any figure goes more than 50, it automatically becomes majority. They can be further classified into the state bank groups. It means the state bank and its associates which were merged to form one entity. So there is a group of banks which have been called as the associates of the SBI, and right now they are now part of the SBI. Other nationalized banks, all other nationalized banks which were not merged with the SBI. Then we have private sector banks. So the ownership of the private sector bank lie with the private entities, right? So in any bank where the private ownership is more than 50%, they are called private banks. Indian banks, they are further classified into Indian bank, foreign bank, and the Indian banks which are working abroad. Indian bank, they are owned by the Indian nationals, and they are further classified into the old banks, that means which were set up before the 1990s, and new banks, that means which were set up after the 1990s. So old bank, they can include, for example, Jammu and Kashmir Bank. The new bank, they can include, for example, ICICI Bank, HDFC Bank. Then we have foreign banks which set up their branches or subsidiaries after 1991 economic reforms. So after 1991, we invited the foreign banks to operate into India. So can you give the example? We have Citibank, we have Royal Bank of Scotland, we have Barclays Bank, right, and so on, right? So all those banks are basically the foreign banks, and they are having their branches or subsidiaries. Branches basically means that one of their branches working in India. Subsidiaries basically means that they have formed a new company and the ownership of company lies with them, right? So subsidiary is basically the company form. They have established a company, the company is working in India, but the ownership lies with the foreign person. Indian banks abroad. So like foreign banks, Indian banks are also set up their branches or subsidiaries in the foreign countries. So we have the State Bank of India and other major nationalized banks which have set up their branches outside India. Regional rural banks. Regional rural banks. So here the name itself says they are rural and they are located in a particular region, right? So these are the regional rural banks, and they were started in 1976. So till 1976, there was a huge focus upon the agriculture sector, in the rural sector. So Narsimhan Committee at that point of time, they suggested that a regional rural bank or RRB should be set up, which will be focusing majorly upon the rural area, right? So in 1976, the setup of the RRB started, and in these banks, there are three owners. One is the central government, then we have state government, and then we have the sponsor bank, right? So central government is the owner, state government is the owner, and one of the bank which acts as the sponsor bank. These three are the owners of this bank, right? So regional rural banks, the major objective of the RRB is to develop the rural economy by providing the credit and other facility for the agriculture, for the trade, for the commerce, for the industry and other productive activities. So they can provide the credit not only for the agriculture but for any activity in the rural areas. It was set up on the basis of recommendations of the Narsimhan Working Group and set up under the Regional Rural Banks Act 1976. So there is a separate law for the RRBs. There is a separate law for the RRB. However, after the Kelkar Committee recommendations, no RRB has been set up since 1987, right? So after 1987, no further RRB have been set up because the Kelkar Committee observed that RRB have not been much successful. RRB, the equity of the regional rural bank is held by the central government, concerned state government, and the sponsor bank in the proportion of 50, 15 and 35. So 50 lies with the center, 15 lies with the state, and 35 lies with the sponsor bank. Equity means the ownership. Equity basically means the equity shareholding or the ownership. The sources of funds of the RRB comprise of, so what are the from where the RRB get the fund? What are the sources of fund for the RRB? So they get the fund from their owners own fund, like they get the fund from the central government, from the state government, for the sponsor bank. They get the fund from their depositors. So the customers, they come and they deposit the money. They also get the borrowing from the NABARD, and they also get the borrowing from the sponsor bank and other sources like SIDBI and National Housing Bank. So these are the different financial institutions. NABARD, SIDBI and National Housing Bank, they are the national level financial institution. They are not the banks. They are the financial institution which actually support the bank in the particular areas. Then, as far as the compliance requirements are concerned, the compliance requirement with respect to the cash reserve ratio, statutory liquidity ratio. So as far as CRR and SL are concerned, RRB are at par with the commercial banks. That means RRB have to keep certain percentage of their net time and demand liabilities portion with the RBI, and as well as they have to maintain the statutory liquidity ratio in the form of government securities, cash and the gold, right? Priority sector lending target. So priority sector lending target, what is this? So priority sector is basically that there are specified sectors, for example, agriculture sector, small businessman, exports sector, so and there are other sectors. So the bank is supposed to provide minimum certain percentage of its lending to these sectors, right? So in case of regional rural bank, they have to provide the priority sector lending equal to the 75% of the total outstanding advances. So if they are giving the loan of 100 rupees, then out of this 100 rupees, they have to give 75 rupees to the specified sectors in the priority sector lending category. However, in case of the commercial bank, this figure is just 40%. So that means there is a huge obligation on the part of regional rural bank to give loan to the priority sector. And why this restriction is so much high? Because regional rural banks are having the specific purpose of catering to the specific needs. That was the reason why they were established. Otherwise, commercial banks were sufficient. In the recent times, there are some reforms going on in the regional rural bank. So there is a plan to strengthen the regional rural banks, and the consolidation or merger plan is going on, which is trying to convert the 56 existing banks. So as of now, there are total 56 regional rural banks. So it is trying to convert these 56 banks into 36 banks. And sponsoring banks, they may amalgamate some of the regional rural banks. So for example, if the Punjab National Bank has sponsored one RRB, so it can actually take back the RRB ownership completely. So instead of having just some ownership, the bank will get the 100% ownership, and in that way RRB will actually stand, the existence of the RRB will get out. It will actually, the Punjab National Bank will merge the RRB into itself. Current structure, if we see, central government is having 50%, sponsoring bank 35%, state bank 15%. And central government has allocated 236 crore rupees towards the recapitalization of the regional rural bank. The banks have been asked to explore the options to buy out stake in the RRB of other sponsoring banks. So the government has asked the bank to actually buy the ownership of other banks also. Now, please see this question which came in 2010. Statement 1, nationalization of banks. Statement 2, formation of regional rural banks. Statement 3, adoption of village by the bank branches. Which of the above can be considered as a step taken to achieve the financial inclusion? So financial inclusion can be done through nationalization. This is true. So through the nationalization, banks are being converted from private bank to the public bank. So now the government has more control of that bank. When the government has more control, the government can actually give the direction that please give the loan to a particular sector, or don't take back your profit, don't make huge profit. So in that way, it will increase the access of the banking facility to the more number of people, and that will mean the financial inclusion. So statement 1 is correct. Statement 2, formation of regional rural banks, that is actually targeting the rural sector, agriculture sector. So definitely it is one step in the favor of financial inclusion. Adoption of village by the bank branches. So here the bank branches will adopt one village and take care of that village for the banking needs. So definitely it will increase the access to the banking facility, and it is also one of the step in the direction of the financial inclusion. So answer is option D, 1, 2 and 3. So this is a very, very easy question. Now there is a agency which is working in the area of agriculture and rural development. So NABARD, the full form is National Bank. So this, the full form is National Bank, but this is not strictly a bank. In its character, this is not strictly a commercial bank or a general bank. So National Bank for Agriculture and Rural Development, right? For agriculture and rural development. It is a statutory body set up in the 1982. What is the meaning of a statutory body? That means it has been set up under a law. So there is a law. There is a law under which this has been set up. There is a law under which this has been set up. So it has been set up under a law. It took over the functions of ARDC, Agriculture Refinance Development Corporation. This ARDC was existing earlier to 1982. It is an apex development bank. So this is basically the development bank or the financial institution, right? We will discuss what is the meaning of development bank separately when we cover the chapter of money and money markets. So it is a development bank which provides help for agricultural and rural development. Now what are the functions? Centerpiece for the entire rural credit system at the national level. So it is focusing upon the credit, it is targeting adequate credit access to the rural areas at the national level. Provider of supplemental funding to the rural credit institutions. So there are different institutions which are providing the credit to the rural areas, which can include the public sector banks, which can include the private bank, which can include the cooperative bank. So all those agencies are getting the support from the NABARD. Provides the refinance facility to the state land development banks, scheduled commercial banks, regional rural banks and commercial bank for the developmental purposes. Now what is the meaning of refinance? Refinance, again I have already discussed, but I am just repeating the same thing again. So for example, any RRB has already given the loan to its customer, right? Loan of rupees 100 rupees. Now RRB want to get the loan from some agency so that RRB is not short of the fund. So NABARD will give loan to the RRB for this purpose. So the amount of loan which has already been given by the RRB to its customer, that amount can actually be given by the NABARD to the RBI. So now let us see the question of previous year. Which of the following grants or grant direct credit assistance to rural householder? 1. Regional rural bank. Option is right. National Bank for Agriculture and Rural Development, and third is Land Development Bank. So RRB is providing direct credit, Land Development Bank is providing direct credit, NABARD is actually providing indirect credit. Right? That means the NABARD cannot give loan directly to the rural household. It can give the loan only through RRB or through Land Development Bank. Therefore, answer is option C, option 1 and 3 only. Right? Next is the cooperative banks. So, the name cooperative, that means there is some kind of cooperation. So here the word cooperative indicates there is some kind of cooperation, and this cooperation is basically among the individuals. So in this case what happens, that individuals, they come together and they incorporate or they establish one bank. Right? They are the owners. They become the customer also. Right? So as an owner, they are having the ownership of the bank, and this works on the principle of one person, one vote. Right? So every person, he is having one vote. That means there is a democratic control. That means there is a democratic control. The same people are the customer also. So because owners and customer are same, definitely there will be no profit making. Right? So this cooperative bank, they work on the principle of no profit, no loss. Right? And even if there is some profit, the profit is to be distributed among the owners only. So profit is made from the customer and the owners get the profit. Now because owners and customers are same, so mostly even if there is some profit, it remains with the customer only. Right? So overall there is no profit, no loss kind of principle. This cooperative bank, they can further be classified into rural and the urban, and in the rural area they can further be classified into different levels. So we will see. Cooperative banks are the financial institutions that are owned and run by their customers. So the same set of individuals, they are the owners also, they are the customers also. It functions on the basis of no profit, no loss principle. They operate on the principle of one person, one vote. The bank is governed by both the banking and the cooperative legislation. Right? So this cooperative structure is there. In the cooperative structure, in every state there is one law, there is one legislation, and under this legislation all these banks are governed. Right? So there is a legislation, and under this legislation all the banks are covered in a particular state. So from the organizational point of view, it is the Cooperative Society Act, and from the banking sector point of view, it is the banking regulator, that is the RBI, which actually regulates. Regulation is also done by the NABARD, because most of them are working in the rural area. Therefore, for the rural cooperative banks, the NABARD is also one of the regulator. So some of the regulatory functions are performed by the NABARD, and other regulatory functions are performed by the RBI. They operate in the rural as well as urban areas and provide credit to borrowers and the businessmen. Cooperative banks offer a range of services, so they are providing lot many services like accepting the deposits, granting the loans to the members, and even the non-members. So they can even grant the loans to the non-members also. It is not that they will be providing the services to the members only, they can provide the services to the non-members also. Overall, you can see cooperative credit institutions in the rural area and in the urban area. Right? In the rural area, they are further classified into short-term structures and long-term structures. The short-term structures are further classified at the state level, at the district or central level, at the primary level, right? So in the short term there are state level, district level and village level, right? Then in the long term structure we have state cooperative agriculture and RDB and primary cooperative agriculture and RDBs. We will discuss each one of them separately. So here we can see the rural cooperative credit institutions. Inside this, the short term structure, we can see the first one is Primary Agricultural Credit Society, PAC. So primary, they operate at the village level. They are at the primary level or at the village level, and it lends to its members. It lends to its members only, right? Central or district cooperative bank, they operate at the district level and it lends to PSCs and the members, right? So central or district cooperative bank, it can give the loan to its own members or at the village level also. Then we have state cooperative banks. They operate at the state level and they lend to the cooperative banks in the district and the villages. Right. So you can see now the long-term structures, they lend funds to the from 1.5 years to the 25 years. So more than 1 year up to 25 years, this amount of loan is given by the long-term structures. And there is two-tiered long-term structure in the rural area. One is the State Cooperative Agricultural and Rural Development Bank. Another is the Primary Cooperative Agricultural and Rural Development Bank. Urban Cooperative Credit Institutions. This is very important because in the previous couple of months, the urban cooperative banks have been in news. So we will also discuss this topic as part of the current affairs. So these urban cooperative credit institutions, they are working in the urban and semi-urban areas, and they can be classified into scheduled and non-scheduled both, and they are monitored by the RBI, not by the NABARD, because NABARD is working in rural area only. So these urban cooperative credit institutions, they are monitored by the RBI only. So overall, if we want to differentiate between the cooperative and the commercial banks, we can see over here. Cooperative bank, they are established under the laws of cooperative society of different states. Commercial banks, they are established under the Companies Act. So they are acting as the cooperative society and they are acting as the company. It is having a three-tier structure with state level, district level and village level. Commercial banks there is no three-tier structure. Each commercial bank, they can open the branches in all the areas. Cooperative bank, in case of cooperative bank, only some of the provisions of the Banking Regulation Act 1949 are applicable. In case of the commercial bank, the Banking Regulation Act 1949 is fully applicable. Cooperative bank, it is regulated by both RBI and NABARD, and commercial bank, it is regulated solely by the RBI. Cooperative bank, it provides higher rate of interest on the deposit, and commercial bank, they provide the lesser rate of interest. Cooperative bank, in cooperative bank, borrowers are members. So most of them are the members only, and therefore, because they are also having the equal voting power, therefore they have the influence over the policies. But in case of the commercial bank, an account holder is not having any influence in the lending practices, and because the account holder is not a member, is not a shareholder. So you can see these are the differences between the cooperative and the commercial bank. Now this question: in India, which of the following have the highest share in the disbursement of credit to the agriculture and rural agriculture and allied activities? This question came in 2011, and let me tell you, I have not discussed this fact yet, but this question is basically part of the economic survey. Every year in the economic survey, they are giving this figure, and always this commercial bank has been the highest provider of the credit, right? So year after year, we can see this commercial bank is providing the highest amount of credit out of all these banks to the agriculture and allied activities. In India, the first bank of limited liability managed by the Indians and the founded in 1881 was, so the answer is Awadh Commercial Bank. So this fact we discussed in the previous session. This question was basically missed in the lesson 1, that is why I have covered over here. So here the answer is option B. So with this I complete this lecture of the banking sector. In the next lecture I will discuss more about the banking sector. We will discuss the different banking schemes, for example the lead bank scheme, service area approach, Pradhan Mantri Jan Dhan Yojana, differentiated bank, for example payment bank, small finance bank. So we will be discussing all of them. With this I complete this session. Thank you very much. God bless you.